Indian economy has to reach $5 trillion in 2025, then IT sector has to play a very important role to reach that milestone. Global consultancy firms like McKinsey said that Indian IT sector's revenue can touch 300 to 350 billion US dollars by end of 2025 if it exploits the potentiality in the sectors like cloud computing, like the cyber security, or the sectors like artificial intelligence. If the Indian IT sector has to live up to the expectations which the whole world has from it, then all the top 5 IT firms of the country has to perform really well in the coming 4 years. Hello friends, welcome to my channel Charts and Patterns, and this is your friend Saurabh Bhattacharya. In this channel, we talk about stock fundamentals and the basic concepts of stock market in a very simple and layman term. Today, we will be discussing about a very important IT stock, which is one of the best IT company of India, not only in India, but it has a very good reputation across the whole world. The stock has a total market cap of 7 lakh crore rupees, and it is listed in National Stock Exchange, the Bombay Stock Exchange, and surprisingly it is also listed in New York Stock Exchange. Yes, it is a large cap company, and primarily the company's base was in Pune. It was established in 1981 and currently its headquarters is in Karnataka, Bangalore. I hope most of you have guessed the name of the stock about which I am trying to say. So let us discuss about today's much important stock, whose name is Infosys. As we can see, the stock has been constantly rewarding its investors with hefty returns from the time it was established. The fundamentals as well as the technicals of the company is outstanding. So without further ado, let us directly go to discuss the fundamentals of the company. Come to the one-day chart of the company, we will see that the stock is giving a return of 2.78%. While if we shift to the 1 week return, then we will see that the stock is giving a positive return of 3.41%. If we come to the monthly return of the stock, then we will see that the stock is giving a minimum positive return of 1.13%. While we shift to 1 year return of the company, then we will see that it is giving an outstanding return of 57.08%. As we slide down more to 5 years return of the company, then we will be astonished to see the hefty returns, which is 262%, which is a huge return for any kind of investment. Let us come to the shareholding pattern of the company. Over here we will see that the promoters hold only 13.12% of the total shares, whereas the FIIs holds 33.46%. The DIIs hold 15.33%, and over here others have a holding percentage of 26.71%. The public holds the least quantity, that is 10.53%. So again, from the shareholding pattern, we can see that the FIIs holds the most number of shares as compared to the other financial institutions. So since FIIs holds the most amount of shares among all the other institutions, we can easily say that the share has a very bright future, since FIIs are considered to be the big players of the market, and we all know that big players can never be wrong in share market. So let us look at the fundamental analysis of the company. Let us study the balance sheet and the profit and loss statement of the company. Let us look at the financials of the company. So over here we have come down to the quarterly results of the company, where we can see that on September 21 the net sales of the company is 29,602. In the same month in the previous year, the net sale was 24,570. So over here, we can say that there is a 20% rise in the growth of net sales on year basis. If we come down to the quarter of June 21, then also we can see that the revenue of the company was 27,896, but now the current revenue is 29,602. So both on year basis as well as quarter on quarter basis, the company has a steady growth in its revenue. Same thing if we see in the March 21, then also the revenue was 26,311, and on June quarter the revenue was 27,896. So every quarter on quarter basis the company has growing its revenue, as well as on the year basis the company is growing its revenue. So which is a very good sign for any company to have. If we come down to the EBITDA, then also we can see that on September 21 the EBITDA of the company was 7,831. If we compare it with the last quarter of June, then it was 7,432. So over here also we can say that there is a rise in EBITDA margin by 400 crores. Also, if we compare the same month on previous year, we see that the EBITDA was 7,083 only. So on year basis, the EBITDA has grown by 750 crores, which is 10%, 10.5%. Again, if we come down to the March 21 quarter, then also we will see that the EBITDA was 7,271. So both the net sales as well as the EBITDA has been growing in a constant pace, and which is a very good sign for the company. If we come down the PBT and both the profit before tax and profit after tax, we will see the same thing. The final profit has been increasing of the company from both quarter on quarter basis and on the year basis. Every year we can say the same thing, see the same thing. On June, the net profit was 5,201, whereas on September, the net profit is 5,428. On March 21, the profit was 5,078. So every quarter, the company not only is increasing its sales as well as the EBITDA margin, but also the net profit of the company is also increasing. Also, if we see the EPS, the same thing can be seen, that on September 21, the EPS, the earning per share of the company is 12 rupees and 93 paisa, whereas on same month of the previous year it was 11 rupees and 41 paisa. So on EPS also there is a rise of 13.32% on year basis. So overall we can see that the profit and loss statement of the company is excellent. So let us now come to the balance sheet of the company. If we see the shareholders fund, we can see that the total reserve of the company, which is really outstanding. You can see that the total reserve of the company on March 21 is 73,855, whereas on March 20 it was 63,031. So the reserve of the company has grown by leaps and bounds. From previous year to this year, the reserve of the company has grown by 10,000 crores. If we come down to the non-current liabilities, we see the company is debt free. There is no loans, both secured and unsecured long-term loans. The company does not have any loans, which is outstanding for any company. Basically, it's the first criteria which an investor should look upon while investing into any company. And if anyone sees this criteria that Infosys is fulfilling, then it is a very good thing to look at. Position of the company's cash. Over here also we can see a very good picture. The current cash and bank of the company is 24,714, means the company's liquidity is intact. On the previous year it was 18,649, and from the previous year it has rise to a very good level, we can see. So overall we can see, means the company has a 5-star balance sheet and it is outstanding, and we can see why the company's share is performing in such a way. If any company has a balance sheet like this, then the company is bound to give good returns to its shareholders. So let us now move to the technical charts of the company, where we will see that where the support and resistance of the stock lies. Now let us move to the technical charts of the company. We can see that the share has made its bottom on 23rd of March 2020, but after that it never looked back. The company has recuperated to a great extent from this fall, and after that it has given a constant growth. If we see the share pattern, the chart pattern, we can see that the company is making constant higher highs and higher lows, higher highs and higher low. So higher highs and higher low signifies that the stock is in bull run, and the exactly the same thing has happened. We can see that the stock has given a massive return to its investors, and right now if we look into this phase, which is from 21st of September to the current stage, the stock is in constantly in a consolidating mode. The stock is in this channel, and right now it is still, it has not breached this channel. Once the stock breaches this channel, we can say that the next bull run of this stock may continue. But over here, this exact point 1841 is a very high resistance for this stock. If the today, if we see the candle, we'll see that it is an indecisive doji, which means that it has neither gone up, neither it has gone down. So both the wicks of the candle is quite big. So over here we cannot decide the exact trend in direction the share will be going. But if we see a new candle which forms over this channel, then we can say that the company or the share is ready for its next bull rally. And if we look at the support, the company has a very high strong support at this region, which is 1660 to 1670. Over that, the immediate support will be 1699, and the next support will be 1774. So these are the few support which we should keep in mind before trading or investing with this stock. So after making a detailed analysis of both fundamental and technical part of the stock, we can conclude that the share is one of the best stocks in Nifty 50 and the investors can clearly get a very good return by investing in this stock. I myself has invested nearly 15% of my capital in this stock, and I am very much convinced that sooner or later I will get a very good return from this stock. So if you find my video very much informative, then please don't forget to like and subscribe my channel. Your every subscription will add a motivation for me to make more kind of these informative videos for you, so that next time you can get more help from my videos. Thank you.